Hey, what is up, everyone? This is Evan Carthy from evancarthy.com. Today, we're going to talk about the Nasdaq for this week, see where it's been, where I think it's headed, based upon the technical analysis I use to personally trade. Today is Monday, May 25th, 2020. Over here in the U.S., super slow day because it is the Memorial Day holiday. Thank you for all you veterans who have served out there in the armed forces. You guys are awesome, and gals. But anyways, the market's closing around noon today, and there's not going to be a whole lot going on. So I'm going to go ahead and do this recap over the Nasdaq, kicking off this week, especially when things get going tomorrow for Tuesday. But right now, what we have for it is the 1 hour chart we're looking up, and as you can see, ever since this low down here, about 66.19 back in that March 22nd, around there. It's pretty much been a straight shot up ever since. And as you can see, this blue line that I have on the charts right here is simply the 200 EMA exponential moving average. All that does is remind me which direction the market is in. And as you can see, when price is traditionally above it right there, it's obviously in an uptrend. And then like when prices continue to go to below, it's in downtrend. And then for the most part, when Trife is carving it up back and forth, it is in a it's in a range right there. So that's all it does. It's just helps me recognize where the move is in the market. So what we're looking at right now is we're going to use two time frames, the hourly chart, and I trade specifically off the 2 minute chart. Here you can see all these arrows. Those are trades I've taken here in the past couple of weeks on this. And so what these white circles are right here is over the weekend I read a book. I mentioned it in the oil review I did yesterday. It's called Trident, a trading system. It's basically just an ABCD type of trade, but has a bunch of different parameters to it. So some of it's interesting that I'm using, some of it's not. But what the biggest takeaway I have from it, let me show you over here real quick. I created this Excel spreadsheet. And basically what it does is this is considered the P1, that's P2, and that's P3. Typically what most people know it as is the A, B, C, and then going up here would be the D target for it. So just an ABCD setup. And so basically I just created an Excel spreadsheet that has different inputs for it based upon the criteria he uses. And the biggest takeaway we have from it is not just the target price. So let me turn these pivots back on for here real quick. There you can see it just helps me locate the prices of the pivots real easily. And so I'm using those three pivot areas, input them in there, and it spit out all these different numbers. So the target from this hourly move is going to be up here around 98.26 for the Nasdaq, assuming this goes up there and hits it. And what I look for this to be a valid trade is the price has to come down at least at a 38%. Would like a little bit of a deeper retracement, at least to around the 50% right here. They like seeing the 61.8, but even just a 38, the way I trade is good enough to lock it in as being a valid trade. So far it is. But the main reason why I'm using this is what you see in this yellow box right here. What this is, he calls it kind of the window right here. And if you get this window in a larger time frame, this is one of the issues I've had with developing using a larger time frame and going down to a shorter time frame is, yes, the larger time frame has the more momentum, it has more of the power and the moves and everything compared to, obviously, an hour time frame is more powerful than a 1 minute time frame. But I can never really figure out how to trade within a bigger time frame in a smaller time frame. But what this system has helped me see is based upon these strategies he has for it right there is one thing he mentions in his book is there's these two equations, turn reversal price and determination price. So when I put the P1, P2, and P3, it just spit out based upon that formula right there and then that formula right there. It spit out these two levels. And what he says is this creates the window right there. And so you have it from about 94.09 to 96.07. As you can see, I drew it pretty close to right there. There's 94.09 to 96.07. So when you can get another long setup within this window right here, he says that is extremely powerful and what you should be looking for, whether you're going long, and obviously the reverse if you're going to go short, assuming, we were going to the downside, like right here, create another window for it. And so what I look for in the hourly chart is to create this setup, to create this window right here, and then look for long trades for this particular setup within it right here. So as you can see, this has created the long kind of buying opportunity window that we are squarely in for the Nasdaq right here. So definitely for the near to intermediate term, definitely looking for more upside going here for the Nasdaq market. If this setup goes to completion right here, then the target would be looking for is around 98.24 here on the hourly chart. Obviously, it can go much higher than that, or it may not even hit, but based upon the parameters right here, that is the target we're looking for right there. But if we go over to the 2-minute chart right here, as you can see today, let me take these pivots off of here. I can see today it's going to be mainly a slow day right here. But I mean, prices grinded up pretty much all day, and that's pretty much what we're going to expect. Like I said, the market's going to close here in I think about 2 hours or so from Memorial Day holiday, and then Tuesday it'll pick up again. But what I am looking for is I'm definitely looking for long setups. As you can see within the box right there, we've had several different setups right here. Like here is a good one right there, bounce perfectly off it, go up here and hit that target, and probably the other target based upon the calculations would be somewhere about right up here a little bit. And so moving into Tuesday, any of these long setups that come back and complete, that come back and at least hit the 38%, I'm looking for to get long. So say this is going to be a high right here. How you trade it is when it comes back and hits somewhere between the 38 and the 61.8, then wherever it goes off, I used to have my entries just kind of blind waiting for it to come back and get filled. Sometimes it worked. A lot of times it didn't work. Sometimes price just come and just totally wipe you out. But with this new entry system, what he recommends is you wait until around a 25%. Let me put that on here real quick. I think the way I calculate it comes out to about 28%. But you see this red line right here. So your entry, assuming that is the low right there, wouldn't be until this red line right here gets hit. It's around 25-ish%. Like I said, the calculations I did based upon his calculations, it comes down to around the 28% retracement right there. Is where you'd look to get in. So although you wouldn't get in, close to the ultimate low, assuming this was the low right here. Let me take this off right here. You would get in probably right around there, and your stop would go just below that low right there. Now, does it work 100% of the time? No, obviously not. But you have two things going in your favor. One, you're in this kind of buying window, as I talked about from the hourly chart. And then two, what you're doing is you're not getting destroyed for when the price just takes off and you have that huge impulse move down right there. You're foregoing those moves. So that's going to help me out right there for my trades. And then basically there's a couple other different parameters for it, but we can talk about that some other time. These are the main ones. But just moving forward into Tuesday's session trading next week, that is what I'm looking for in the Nasdaq market. Coming up for this week is any retracements that are coming up for it. I'm looking for, let me remove that 28% off of there. I'm looking for any pullbacks back into this range, anywhere between the 38% to the 61.8%, and then after that pullback happens, wherever it is, then I'm looking for price coming up to somewhere around that 28%. Just it depends upon the calculations. It's going to be whatever the entry price is. So if we just use this, for instance, right here, let me just show you here real quick. So what we would have if we use this low down here, we got 94.44. The high is 95.28. And then we'll just assume the low of this is a swing low right there, which would be 94.80.75 for P3. So the target would be 94. 95.64. We'll just draw a line right there. That's about it right there. And then the entry price would be 95.0175. We'll draw a line right about there. 95.01. That's close enough. And then lastly, what's called the critical price, 95.2275. So that's going to be up here somewhere, right there. So assuming this is the low down here, we'll draw another little line right there to say that is going to be the low right there. What I would be looking for this trade is I would be looking to go long right there. And let me draw this line. We'll just assume that's the price move down, and then the price move comes back up in some form or fashion, hits that. That gets me in right there. I don't want to have a black line right there. Where's the other one? This one right here. The stop loss would go just under that swing low right there, that very low right there. It would just go under. I'd give it this is a Nasdaq, so probably give it about 2 to 3 points or so lower. Is that 94.80? Yeah, probably have about 94.78 right there would be where the stop loss would be. So get in right there, and then when price hits the critical, what he calls the critical point right here, and this is another way my trading is going to differ a little bit than what he recommends. So I'm looking at getting in 2 contracts right there. First contract you exit right here, and then when that gets hit right there, the critical price right there, you move your stop loss from down here. He recommends moving it up to your entry price right there, but based upon all the ways I was going over the weekend, just looking at all the different setups, a lot of the times the price will come down and hit your entry price area before moving back up again. So what I'm going to do is probably have it somewhere between the low down here and then the entry price. I'll probably have it just a little bit below the entry price, just give a little bit of wiggle room. And just in case if it does come down and knock it out, I will at least get some type of small profit from it. That's going to cover the cost of the commissions and put me in profit overall, where if it comes down and hits it out. But if it doesn't, then the other contract, the exit is going to be up here close to the exit for it. And so that's the way trading this moving forward. It fits in with the ways I have been trading, basically just waiting upon the 50% retracement for it. But I think this does help me avoid a couple of the pitfalls of when price just crashes down and just straight takes you out. Does it work 100% of the time? No, obviously not. But I think it does help filter out some of the trades. So that's why I'm looking at trading the Nasdaq, the S&P 500, Russell 2000, also the Dow Jones, which are the futures contracts that I do trade for it. But for the Nasdaq here for this week, definitely looking for more longs. Longs as the market continues to just grind higher. And again, this is based upon this window that created from that setup right there that the Nasdaq is currently in. And for this hourly long, if this setup does go to completion, we're looking for at least coming up here to about 98.26. So definitely bullish here for the near and intermediate term for the Nasdaq. If we go over here for the long-term time frame for the Nasdaq, it's going to look pretty similar to the other chart setups that we have for the S&P 500 and also Dow Jones and Russell 2000, meaning it's come down off of these lows and it's just pretty much gone up ever since, up until we had that recent sell-off. But now price, especially even on the Nasdaq, has gone even way higher than the S&P 500 and the Russell 2000. You can see we had this gap right here. Well, a gap on the Nasdaq has already come up and gotten filled on it. Because if you look at the S&P 500, here's the gap, still a ways away from it. Currently, we're about at 29.88. The gap up here is around 33.21. Here's the Dow Jones right here. We still have that gap over here, 28.79.6. Price is at 24.696. And then for the Russell 2000 up here, ooh, that's a lot of crap on that chart. Let me move all that stuff. Still have this little gap up here around 1670.8. Price is around 1377. So as of right now, Nasdaq is leading everything higher and is getting ready here pretty soon to make another all-time high, assuming it goes higher than, what is this right here? 97.63. So if it breaks 97.63 up here, which it's getting pretty close to doing, we'll have another all-time high here in the Nasdaq. So right now, Nasdaq is leading the market. But anyways, that is the Nasdaq for the week of May 25th, 2020. Take care, be safe. Talk to you later. Bye.